Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion, and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Mike P., John B., Todd A., Dave V., Paul M., and Jackie A. We have a returning guest on the program today, and one that we're pleased to have back. Miss Marna Cloete is back with us. Marna is the president of Ivanhoe Mines, an Africa-focused major copper producer with its operations at the Kamoa-Kakula complex, Democratic Republic of Congo, which is in the final phases of expansion and is projected to position Kamoa-Kakula as the third largest copper mining complex globally and the largest copper mine on the African continent. Moving to South Africa, Ivanhoe runs a very large-scale Platreef project, a platinum group metal and precious metals project that is in final commissioning and early stage production in South Africa with future expansion to come. Ivanhoe Mines has further project pipeline through exploration grounds at Western Foreland, as well as the Kipushi base metals project in recommissioning stages that will be under initial production during this year, once again in the DRC. Ivanhoe Mines is listed on the Toronto Stock Exchange under the symbol IVN, as well as on the US OTC markets under the symbol IVPAF. Marna, it's a pleasure to have you back on the program. Welcome.
Thanks, Andrew, and thanks for having me. I don't think I need to say anything more after that introduction.
Well, thank you for that. And we've got our favorite beverages in hand, so appreciate you coming
Yes,
back to talk with us and update on Ivanhoe. So much has changed. It's been a while since we've had you on the program. And why don't we start back here, because we have new audience, of course, since we last talked, but why don't we have you just give us an introduction to Ivanhoe Mines as you see the company today, because it has changed so much over the years. Of course, while we're on that, maybe you can go into a general operations update and your outlook to wrap up 2024 for the company.
okay, thanks. Let me do that. It's actually been such an exciting journey. I've been with the company this year for 18 years, and many people, when they hear that, almost fall off their chairs to think that you can work with Robert for 18 years. But he's been extremely good to me, and we've been building up specifically Kamoa-Kakula from scratch, from the first discovery hole of the Kamoa project back in 2008 to discovering Kakula in 2016, doing a partnership transaction with Zijin as a joint venture partner at Kamoa-Kakula in 2015 to raise funding in order for us to build the first phase of Kamoa-Kakula. That we did through COVID, so basically 2019 through to 2021. And then we started producing. So from that first drill hole through to our first production, I've been part of the journey. We started out with about 10 people in the office. Today we're over 20,000 people, of which most of our staff are Congolese. So over 90% of our staff are Congolese working on Kamoa-Kakula. And just talking a little bit about the production profile at Kamoa-Kakula, we started first producing annual equivalent of 200,000 tons through our first phase, then 400,000 tons when we brought online our second phase. Then we did a debottlenecking program, increasing our capacity to 450,000 tons per annum on an annualized basis. And now, this month, we started our third line, our third plant, which is slightly bigger, which will bring us up to 600,000 plus tons per year on an annualized basis. And that basically places us as the third largest copper producer in the world. But that's not the end of the journey for Kamoa-Kakula. We're busy constructing a smelter, and that will come online towards the end of the year. We'll have the capacity to produce 500,000 tons of copper anodes, and then we will also be sending our remaining concentrate to the Lualaba copper smelter in Kolwezi, where we have basically a wheeling agreement for ultimate offtake to our offtakers. So it's really been a very exciting journey getting the project to where we are, but that's not the end of it. We always think of things to do that we can improve on. And we recently launched what we term Project 95, and that's a project to basically take up our recoveries from 87, 88% to 95%, which will give us additional copper production. That study we will publish imminently, probably within the next couple of weeks, and then we will start executing on that project. And what it basically entails is a few additions to our existing plants and a finer grind, a conventional finer grind. So quite excited about that. And then we're also adding on additional tailings retreatment of our tiles. We always joke that our tailings dams are probably sort of the greatest undeveloped deposit out there, because our average grade is on the tailings dam is well above what other mines in South America is mining. So another project that's ongoing at Kamoa-Kakula. Thinking further on Kamoa-Kakula, as much as the third phase was sort of our early horizon expansion, we're also working on what we term phase 4 at Kamoa-Kakula. And we're planning to publish a study towards the end of the year where we will update the market on what a further increase of the production profile of Kamoa-Kakula could look like, and what the time horizon for that would be. So it's really an ongoing success story. We keep on exploring. Next to Kamoa-Kakula, we have what we call the Western Forelands, which importantly to note is not just one project, but multiple licenses that we hold adjacent to Kamoa-Kakula. It's 7 times the size of Kamoa-Kakula. We've already made 3 discoveries there. And this is really the first dry season where we have the full season to drill, because previously we were building infrastructure to get access to most of the licenses. So very excited to see what's happening there. And then briefly touching on Kipushi, we turned on the concentrator, starting production, busy with the ramp up of the concentrator. So exciting times at Kipushi. It's a historic mine. It's been 100 years since it started, so it's sort of its celebratory centenary birthday, and we're very excited to bring that into production. And then back in South Africa, we are building the Platreef mine, a PGM mine with significant base metals. We've basically finished the first concentrator plant, and we will start production at Platreef towards the middle of next year. We currently using our hoisting capacity for a combination of hoisting ore and waste. So we will only start feeding the plant next year. So that's sort of a brief introduction as to where we are since we last spoke, Andrew.
First of all, congratulations. This has been absolutely an incredible run here. We're proud to say here at SmithWeekly that Ivanhoe Mines remains to be in our portfolio, coming on 10 years. It's just an absolute pleasure to still have Ivanhoe in our portfolio, and it's been a very good experience. And with that, you said 18 years at the company, and of course, we know how long things can take in this business. So I didn't fall out of my chair, and here's a joke. Had I fallen out, I actually have fall protection in my office now because of our safety protocols. I'm just kidding, but incredible job, and I think the market is still discovering the upside, and the deliverables always come in, under promised, over delivered. Just really, really great strategy you guys have been able to unveil over all these years, and there's so much more to come. And so I want to thank you for that. Why don't we just step back a moment and have you give your thoughts on the copper market here, and of course, overall sentiment in the market for copper producers?
So it's always been quite a frustrating space if we talk about copper, because if you're a long-term copper believer, we always felt that the copper price were really lagging behind what the fundamentals were and what the realities were that we sort of saw in the market, especially when it came to the availability of concentrate. When we met with the traders, they were always pulling their hair out of their head, saying, they cannot believe that the market hasn't adjusted. And I think what we've seen sort of over the past couple of months is that the market is finally catching up to the realities of copper supply and the fact that copper will be very tight going forward. We just mentioned that it took us 18 years to get to where we are. And, if we project in terms of what the world would require in terms of renewables, that's solar, EVs, the transition to net zero, we will need to discover multiple Kamoa-Kakulas over the next couple of years to supply to the demand. And being in the seat where I've walked that journey, I can tell you that that is a very, very tough ask. If we look at new projects coming online, very few new projects coming online. Yes, the industry is trying to consolidate, but it's really just flipping ownership from one group to the next. It's not really adding a lot of new tons to the market. So we remain extremely bullish on copper. That's why we believe the best use of our capital is exploration, is to try and add more Kamoa-Kakulas to our portfolio and to add as many copper tons to our portfolio. So when you look at a project like Kamoa-Kakula, for us, it makes absolute sense to see what's the absolute maximum production we can get out of Kamoa-Kakula, but also what can we find next door, because we understand the geology, we know there's more discoveries to be made. What can we find, and where do we put the first next mine? Overall, I think it's been a correction, maybe a bit of an overcorrection initially, and then sort of copper pulled back a little bit. But I think we're just going to see a steady climb in copper demand and in where copper is heading. Yes, things are softening in China, but with China, it's always quite unpredictable. One day it's softening, and then the next day we see there's a squeeze again. So very bullish, and definitely a space that Ivanhoe Mines would like to play in for a very long time.
I, of course, share your sentiments with respect to copper. I think the bigger importance here, and you started to talk about it, was just the inability to get new large projects online and going and steady state. It seems to be that permitting, regulatory, in some places anti-mining sentiment, and those types of
Mm,
things are the real driver for, and depletion, of course, the real driver for copper price. And yet, things like EVs and electrification and government promises sometimes, obviously, we know aren't kept. A lot of hot air out of places like Washington, D.C. That's kind of icing on the cake. But the real body of the cake, if you will, I think, is on just the crunch on the industry side. And I'm excited about where we think
mm,
copper goes. And of course, you guys are so far in the money already with this project because it's such a tier one asset. The market has seen the productive capacity
mm.
on a revenue basis and profits that this company's been able to turn out, and there's much more to come, of course, on expansions. Briefly here, can you just talk about how you see guidance, maybe the rest of the year, just at the various operations? Maybe you can give us a few numbers and just talk generally. Of course,
Yeah.
anything you can say on that front.
So our guidance at Kamoa-Kakula is between 440 and 490,000 tons of copper production for this year. This is on a 100% basis. And our cash cost guidance sits between $1.50 and $1.70. We are still reiterating guidance. We had a softer first quarter, and that was mainly due to power interruptions that we've subsequently really broken the back off. And that was through um, sort of accelerating efforts working with the state-owned power utility on grid stability. We're doing a large maintenance grid stability program, but also through reaching agreements for the import of power from Mozambique, as well as a little bit of power from Zambia. And that's really assisted us in the second quarter to sort of stabilize production. So we definitely reiterating our guidance. For Kipushi, we haven't put out guidance yet. We should most likely put out production guidance within the next week or two, and then cost guidance probably only towards the fourth quarter once we've been operating for a couple of months, just for the operation to settle, and then we'll give the market a bit of guidance on our cash cost there. And then obviously Platreef is only starting producing next year. Capital for all our projects, we remain within guidance. We haven't changed guidance, and I think that's one of the things, as you said, where we try and be as predictable as possible. We stick to our budgets and we try and get in ahead of schedule. So it's something we pride ourselves on, and we incentivize our people to achieve these targets once we set our minds to building a project and to bringing it off the ground. Giving you a bit of a flavor, sort of all the efforts I'm talking about, Project 95, Phase 4, the vision is to ultimately get Kamoa up to a north of 700, 800,000 tons of copper mine per annum. And those sort of numbers will be firmed up by a study and PEA that we will publish towards the end of the year.
Absolutely, some impressive numbers there, and the future numbers coming down the pipe here. And of course, for us, we've already seen the ability to demonstrate and prove that project. And so we're just excited to see things continue on pace. And you guys have just done a great job of those deliverables on time and on budget and early, and all those things that you guys do as a management team that is just the right way to do it. So I really appreciate that. We talked just a little bit on the higher level numbers here, and I'll come back to Platreef and get some updates there. But let's go to capital structure for just a moment, Marna. Where are we on shares outstanding at this point, the cash on hand, the debt position, revolvers, et cetera, and then, of course, major shareholders of the company?
Yeah, so maybe let's start with shareholders. Our shareholders have been very supportive and they've been, on the book for a very long time. We've got Robert, who's been the founder. He's sitting with just over 13%. We've got Zijin, a gold mining company, who's also our joint venture partner, and Kamoa-Kakula, also just over 13%. And then we've got CITIC that's sort of hovering around the 26% mark in terms of our buy shareholders. And then all the major big institutional investors like Capital Group, Fidelity, BlackRock. We really have a supportive register that's been with us, Rothschild, through thick and thin. When it comes to our capital structure, we're very debt light. We had a convert outstanding that we converted our convert this past quarter. So that basically took any sort of financing off our balance sheet. We had over $400 million worth of cash in the bank at the end of the first quarter. I don't have the exact numbers of our quarterly year in front of me, but we almost, I would say, have a lazy balance sheet because we don't carry any real debt at an Ivanhoe Mines level. But what we have done is we've raised debt facilities at a project level. The one thing we were quite surprised with in the DRC is it's quite a capital intensive year for Kamoa-Kakula, and all the expansions at Kamoa-Kakula past phase 1 and phase 2 we are funding from cash flow. And we needed to raise additional facilities to tie us over in country, and we managed to raise significant facilities in the DRC at very competitive interest rates, which was quite surprising to us. The one thing when you're a junior becoming a builder and then an operator, people never want to give you money when you need it, but when you don't need it, then we find that everybody's quite available to give you some loan funding. So we've been quite fortunate at Kamoa-Kakula that we managed to raise significant facilities basically just to carry us through this year. Kamoa-Kakula, after the expansion that includes the smelter and some of the energy projects that we are currently executing, will start throwing off significant cash flows from next year onwards, and that we can then reinvest in some of our other initiatives. Just talking a bit of capital profiles. So our planned capex for this year and next year combined at Kamoa is $2.5 billion, and that includes sort of what we had outstanding at the beginning of this year for completing the third plant, as well as the smelter, as well as the energy projects. And then at Platreef, our capex requirements for this year and next year is $660 million, of which $210 million is for phase 1 of Platreef. And Kipushi is $195 million, of which we basically spent most, and we've now turned on the plant. We actually just started producing concentrate over this past weekend, so it's really fresh off the press that we turning out concentrate at Kipushi. Very excited to get that project off the ground.
Absolutely. Yeah, and by no measure, this company is definitely not a junior anymore, that's for sure. And quite frankly, the whole
No.
time it was really never a junior with these monster projects that were on the books even 10 years ago. With that, I just wanted to ask you this, just to give the audience a bit of a flavor. Maybe you can help them out so they don't have to do so much homework, although they should be doing their homework to understand these studies. But Marna, with the future capital expenditure that you went into on a continued construction and expansion of mining operations basis, do you see that the company will turn to some type of a leverage here, or do you see that it will rely upon existing cash flows from operations to fund the expansion work, or possibly do you see potentially, depending on market conditions, utilization of other sources of funding?
So what we've managed to do is basically raise facilities for each of the projects to wash their own face. So at Kipushi, as part of the offtake agreements we are concluding, we're raising prepayment facilities with the offtakers, and we've also raised a term facility with a local bank. So Kipushi will basically generate its own cash flows, pay back its facilities, and then start paying dividends up to Topco. Platreef, we followed a similar model. We did a stream for phase one at Platreef. Phase one is the phase that will start producing in June of next year. But we've changed our strategy at Platreef to basically accelerate directly into what we call phase two. And I'll maybe discuss a little bit our plans at Platreef, because that changed quite significantly just after we've spoken about sort of cash allocation. But at Platreef, we did a stream, and then we did a layer of senior debt on top of the stream, which we are expanding once we go into phase two. So we've basically anticipated that we will use a senior debt facility for the expansion into phase two. We will require a slight capital injection into Platreef, but that will mostly be done through senior debt. At Kamoa-Kakula, as I mentioned, basically this year is a cash intensive year, but by next year we will throw off sufficient cash flows that we will start repaying shareholder loans, and that will basically become treasury back in Topco at an Ivanhoe Mines level that can be redeployed for other initiatives such as exploration or for further growth in the company. We're also actively starting to look at M&A transactions and see what we can add to our portfolio that's of sufficient quality, that would not dilute the sort of quality of our current resources that we have in our portfolio.
Well, that's going to be terribly, terribly hard to do, Marna. I
It
mean, if you
it
guys have,
it is a tough it's a very tough ask. So when we sit in these investor meetings in the past, people wanted to know, okay, and then phase one and phase two and phase three, and you had this narrative. And now when we get into investor meetings, people also, what's next for Ivanhoe Mines? So we need to have our ducks in a row to say what's next for Ivanhoe Mines, and we do see ourselves as a major diversified mining company. We're quite nimble and quite entrepreneurial, but we think we've got a couple of exciting things we are currently working on that we are quite excited about. So we might just surprise you, but let's see. It's too early to tell. But
yeah,
maybe just getting back to Platreef, just to give you a little bit of a flavor as to what happened at Platreef. So initially, we wanted to do Platreef in a phased approach, similar to how we approached Kamoa-Kakula. And we had the old bulk sample shaft that became an exploration shaft that we ultimately then converted into a production shaft. But we only have 1 million tons of hoisting capacity. And we started with the development of shaft 2, which will be the main production shaft. So it's got the capacity of 8 million tons per annum. So it's a massive production shaft, but it takes a long time to develop that shaft. And initially we were going to blind sink that shaft. But with the development of the first shaft, we then realized we could actually raise bore this shaft, and that would enable us to accelerate the development of shaft 2. And while we were doing that, we started with shaft 3, which is a vent shaft. And then we started thinking, but can't we use the vent shaft also to use to do hoisting, to get some of the waste out while we develop shaft 2, and also to accelerate our production profile, because our first phase mine was going to be sort of a small producer, basically just washing its face, being a bit of a proof of concept. So we had to do shaft 3 anyway as a vent shaft. We decided that we're going to equip shaft 3, and shaft 3 should be online by the end of next year. And that will enable us to accelerate our production at Platreef to a 4 million tons per annum mine. So that's sort of just just south of 500,000 ounces of 4PE. So that then becomes a significant operation. And Platreef was always meant to be a large-scale mine, just due to the size of the ore body, the way you need to mine the ore body. It was never supposed to be sort of a small-scale producing mine, but we did want to get into the ore body and start mining the ore body. So we've only got 1 million tons per annum hoisting capacity, so we decided to prioritize the hoisting of waste above the hoisting of ore for the next couple of months to enable us to get shaft 3 equipped and ready in order for us to basically go directly to become a 4 million ton per annum mine. And we will be publishing a study showing this accelerated mining plan towards the third quarter of this year. So as much as we deferred sort of that first phase mine, it's actually a good news story because we're sort of jumping straight into becoming a larger scale producer.
Want to give the audience a flavor on this too, so they can understand that there's this pipeline plus expansion coming here, and we're talking just at Platreef, and then a substantial revenue growth as well coming in here. I haven't actually done the math, you'll have to forgive me, on the percentages of revenues essentially coming from an expanded Kamoa-Kakula, and also how Platreef now factors into that pie chart of where that's coming from, of course. And so that's a substantial number that's coming in over the coming years. Maybe you can say something on that for a moment, but let me ask you this. Challenges, anything that you're seeing out there across the projects, challenge areas that you see for the company as it continues operations and expansion work, of course, ramp up at Platreef, always a challenge,
Yeah.
commissioning. But anything you'd like to point out, because this work is super complex, very complex what you guys have been able to do. The mining methods are more complex, but you, Robert, and the team, I'll be honest, compared to a lot of companies out there, you guys have made this look pretty easy.
Yeah, it's not that easy. We just make it look easy. So we in Congo, our biggest challenge has been around infrastructure. Initially, we were sort of a victim of our own success on logistics, and we really had to bunker down and pay a lot of attention to logistics, availability of trucks to move the amount of volume that we added to the corridor, debottleneck, border congestion. We really worked hard at it, and we think we've broken the back of it, but now we're adding Kipushi. And in anticipation of adding the Kipushi volumes to the corridor, we actually started our own marketing company that basically just deals with logistics. We initially thought, if you sell at mine gate, your logistics will be the off-taker's problem. It ultimately remains your problem because the cost is passed through, and you still need to manage it and be on top of everything happening down your logistics value chain. So I think that's one of the hard lessons we've learned. What's quite exciting on the logistics in terms of developments or the Lobito corridor that's being supported by the US. We're currently running trial shipments on the corridor. Turnaround time is significantly less than the routes we are currently following. So we currently go to Durban, Dar, Walvis Bay. The Lobito corridor turnaround time is 20 days. Where we currently look at sort of anything from 40 to 50 days turnaround time, and that's if there's no issues at the borders. So it saves a lot of time. It will be much more cost efficient, and we're working with Trafigura to see, how we can develop that corridor and be an anchor client. We've reserved capacity on the corridor for between 120,000 to 240,000 tons over the next 5 years. So we think that will also assist in getting our cash cost down even further. And then the second sort of challenge that we've been grappling with, and that you saw in our production in the first quarter, has really been around power and power stability. And there we sort of jumped in and we started engaging with the government in the DRC to work on a project where we assist with infrastructure upgrades across the network to ensure that we get stability. We do it through a similar model than we do the hydropower plants that we are refurbishing for the government, whereby we fund the projects and then we get repaid through a 40% rebate in our electricity tariff. So we have a team stationed in Kinshasa assisting with the execution of grid upgrades to ensure that we get stability. And then also the regional power imports have made a significant difference in our power stability. And then obviously when it comes to South Africa, one of the questions that's first and foremost on everybody's mind is power. Initially, we will not be an integrated mine at Platreef, so we do not have such a large power requirement like we have at Kamoa-Kakula with the smelter. But we have an agreement in place with Eskom. You do get a preferential treatment as a mining company, so you don't get switched off because it's sort of considered this I can't remember the exact term they use for it, but it's essential services, so to speak. They do not switch off underground operations, as an example, due to safety concerns. So that is in place, but we are also working with a number of private power providers that will be wheeling into the grid to ensure that we can get cleaner energy supplying our mine, because it's not just what you mine, it's also how you mine it that makes a difference. And we would like to move away from coal if it's at all possible in South Africa. Initially, we will be grid dependent, but over time, we're looking at renewables delivering power into the grid. So infrastructure is your biggest challenge. Obviously, the political situation in the countries where we operate, I think that's a common theme across the globe. But there you always need to keep your finger on the pulse. We just had elections in the DRC towards the end of last year. We just finished elections in South Africa. And that's always sort of a period of uncertainty where you need to see sort of what the policies will be, how it will impact on your business, and where you need to sort of proactively engage with government to ensure that you get ahead of the issues that may arise. But apart from that, I think overall we've been very successful in what we've embarked on with a very talented group of um, people that work for us, especially in our project execution side. We've built out operational teams, we've trained people. And yes, if you ever have the privilege of visiting Kamoa, just if you go underground, it's Congolese operators operating the machines. We don't have Australians doing long hole stoping underground. We train the Congolese to um, to do what we need them to do in these modern mines. And you can see people are very proud to be part of a modern mine where we encourage local employment, local procurement, local beneficiation to the communities. It really makes a difference. It makes people buy into your project, and it makes the government want you to succeed. So that's our operating model. But that being your operating model means that there's a lot of stakeholder engagement that needs to happen, and you need to make sure that everybody's interests are aligned. So I would say that's probably where we spend most of our time to ensure that things do operate smoothly.
Thank you for all that. And the model that you guys are delivering here, I think, is very important for other companies, peer companies, to take a look at with quite attention to detail. And I appreciate you talking about those various initiatives that you guys are working on. And it's a huge challenge to bring in and localize that competency is very, very important. And you don't always get to see that because, as you know, our industry is starved of good, competent folks. And we need more of that. And so that wisdom transfer
Mm.
is very important, and local community education and skills training and all that is so important. We absolutely need more and more of that. So really appreciate your guys' efforts on that front, and just overall importance of mining and how important that is. You mentioned it down in South Africa about making sure power allocation. Well, of course, this is a revenue generator. This is a tax revenue generator. It's an employment mechanism. It's a tremendous opportunity. It should get all the power it can get to make sure that, because it supports everything else in the country and the wealth of the country. And then further, as you and I both know, Marna, the health of the society is very
Yeah,
important. And when you have
yeah,
operations like this, you have good employment, you have skills, you have education, you have money flow to the people to use in the local economy. Everybody is healthier. And it's absolutely a very good setup. And I appreciate the comments on the Lobito Atlantic Railway corridor through Angola. I'm excited to see how that ramps up and how you guys can continue to get product out through that port. I think that's a great move to bring those costs down as well. So I'm excited to see how that ramps up over time here. One of the other things, I think we talked about this a little bit, but maybe I'll just have you give a brief comment. Talk just a little bit more about, with your guys' exploration projects. It's pretty clear that you guys are replacing depletion, but talk about that in terms of you guys are basically, in a way, building pipeline, replacing depletion, and actually growing resources across the portfolio. Specifically, of course, Kamoa-Kakula complex, but just talk briefly about those efforts to kind of bring more pounds under the umbrella.
Kamoa-Kakula is obviously a massive footprint which we haven't explored the full boundary of the mining permit to date, because we've got sufficient resources to keep us going for some time, and then we obviously add this to our models as we expand our projects, and that's what we are working on for publication sort of towards the end of this year, to show what that phase 4 would look like, opening up additional mining areas, bringing online a couple of open pits to basically feed what would be an additional plant, which is phase 4, but we're still sort of deciding on the sizing of what phase 4 would look like. So that's Kamoa-Kakula on its own. That sits in a joint venture with Zijin. The exploration that we are doing on the Western Forelands are 100% Ivanhoe Mines led. It's made up of over 20 different permits. And these permits are all in a different stage of they're either exploration permits or they're converted permits. When they're converted permits, we hold these permits together with government and a local DRC partner in terms of DRC law. And then we also have a number of earn-in agreements with local partners where we are running the exploration programs, and we basically earn in a control stake on these different permits. And it's the Western Forelands where we are focusing our exploration efforts, because it's our objective to, within, I would say, the next 3 to 5 years, build another mining complex next to Kamoa-Kakula that will be majority owned by Ivanhoe Mines, with local partners in accordance with the DRC mining code. There we've made 3 discoveries to date. And we're currently doing drilling to sort of inform, infill drilling between these different discoveries to see what makes sense in terms of critical mass for first mine development, but also step out drilling to see what we learn in terms of the trend on this basin. We're also adding additional licenses to our license holding, so that's why we're sometimes a bit quiet on exactly what we are doing on exploration, but we did publish a number of press releases towards the end of last year, sort of showing what we've discovered to date. The rainy season ends in March, April, and we're basically in the dry season now, and the exploration geos are having the time of their life drilling the Western Forelands at the moment. They have a budget of over $70 million just for exploration activities. And I think they're drilling in excess of 70,000 meters of drilling is planned for this year. And obviously, once there's significant results, we will make it public to the market. But we are definitely seeing the potential to build another mining complex within the next 3 to 5 years. Will it be Kakula style? We hope so. We are seeing drill holes that sort of encourages us to say there could be another Kakula out there, but it will definitely be a Kamoa style deposit. So we've got sufficient critical mass to know that we've got Kamoa style deposits out there. But we're quite spoiled, once you get used to a 5% grade, it's very difficult to not try and sort of chase the higher grade holes and see if we can find a critical mass to find another Kakula. So it will basically take the remainder of this year to sort of plot the data together to see what makes sense in terms of getting to some sort of early stage study on the Western Forelands. And then obviously it's a big area to cover. So a lot of the work we do is to just ensure that we don't miss anything high level, and then where we see greater potential, we run detailed drilling programs to ensure that we do try and chase down what we think could be more Kamoa-Kakulas. So our exploration team, we've grown quite a bit over the past 2 years. And we have a standalone exploration team that stays in a camp very close to Kamoa-Kakula, but they're sort of a company on its own.
Really good information here about you guys are again building an organic pipeline, and it sounds like there's more than one happening here. So that's really good to hear. And there's a lot of upside coming, I believe, down the pipe here on that particular part. So I appreciate that. And that brings me back to the in-house growth, of course. But then also you mentioned M&A a little bit earlier. I want to come back to that just briefly for you to touch on. What do you think there would fit into an M&A? Because as we discussed, you guys have a super high bar for those types of projects that are kind of impactful or move the needle to the current portfolio. That's question one.
Mm.
And then do you see, obviously we've got the in-house work, of course, which obviously this whole company's been built on as in-house work. But then last question here, will the company stay in Africa, Marna, or is there intent to go outside of Africa with Ivanhoe Mines?
I don't think we're sort of bound by geographical boundaries. It's more, is the resource of significance for us to go there, and is it geology that we understand, and is it an ore body that we think we want to put our name on? So we will go outside of Africa. Obviously, we are well placed within Africa. Most of our management teams sort of more African experienced. Our operational teams are operating in Africa, but we will venture outside of Africa if we had to add, if the geology determines that we will have to go outside of Africa. Obviously, we're comfortable in Africa, but it is difficult to find assets that's of similar quality to what we currently have in our portfolio. I think the one thing that we've learned is you don't just do an M&A for the sake of doing M&A and saying that you've done M&A. It needs to be value accretive. We've got enough on our plates in terms of in-house growth potential, where we think that from a capital intensity point of view, we can add a lot more value to our shareholders than necessarily spending silly money on a project that will bring marginal profits to our income statement. So we will be careful in assessing options if we add something through M&A.
Very well said, and I fully agree with that strategy, Marna. You and I have both seen M&A for the sake of M&A all over the place, and we know how that goes and the results that come from that most of the time. So I appreciate the thoughts on there. Want to move over to a side question here, and we'll get into a few other things as we wrap up here on other topics. But I wanted to get from you, there's a lot of various catchy terms out there, Marna, about energy. Of course, the discussion around climate, but Ivanhoe is a copper producer, and the primary focus of the company is copper, which obviously plays into this. It's very critical, regardless of any of these other items. It's super critical, irrespective, because it's used in every source of energy that we have. But what is your view of clean energy, if I can say clean energy? What is it to you, Marna, or maybe even more intelligent quality of energy?
Also, let's go back to the first part of your question, sort of the buzzwords on the energy transition and all the promises that's been made. So, and this is probably more my personal view. I think a lot of it, yes, it will happen. We all know it's the right thing to do. We all know we need to target emission reduction. Is it going to happen on the timeline that people are promising? I think it will be a very tough ask. You know, we were all set for sort of net zero 2050, I think was the initial target. And then something like Ukraine and Russia happened, and priorities shifted immediately across the globe. And then you sort of sit and you look at China and Taiwan, and you don't know what's going to happen. And will that shift priorities again? So I think through all these things that you cannot predict, you look at what's happening in Israel, the priorities, the world sort of focuses on shifts. But the energy transition will remain. I think people realize that we need to look after our planet responsibly, and that the way to do that is by producing clean energy. And then what do we see as clean energy? We see clean energy as anything that doesn't emit sort of dirty factors into the atmosphere. So we want to move away from the coals, we want to move into the solars, the winds, and all of that is very copper intensive, and we want to move away from diesel vehicles. So we want to move to electric vehicles. Is all of this going to happen overnight? I don't think so. I've recently been on a trip to Miami, and my reference point is Africa. I stay in Africa. Everybody in Africa loves driving a Toyota Land Cruiser, Toyota Prado, a Land Rover, because we all want to go 4x4ing. I think it's going to be a difficult market to crack in terms of EVs over time. And then similarly, when I stepped out of the plane in Miami, like everybody they drive these massive trucks, and I just can't see people changing overnight into EV. So I think it's going to take time for these sort of initiatives to come off. I know I'm speaking against my copper book, but I am talking my platinum palladium book now. So I think there's a balance to be had. And is the whole world going to transition overnight? No. And then I watched a debate. It's one of these university debates where it was about woke culture. And it was about, do we expect the countries that will produce the metals and minerals the world will need for the energy transition to stay behind? While they provide the raw materials, the rest of the world want to move into the sense of we are living in clean energy, we're no longer emitting we no longer have bad emissions into the atmosphere. But we also have to think about the growth in developing countries and the industrialization of developing countries and how we can responsibly do that, because developing countries are catching up, and they also want to see economic growth for people, and they also want to see people staying in nice houses and driving nice vehicles and having access to electricity. A lot of the towns I still visit that's close to my house they're not connected to the grid. People don't have electricity. People don't have access to water. They need to go to a borehole to go and get water for the day. And I think that's a reality that a lot of the people around the globe don't necessarily face every day. So you're going to have to find the balance between energy transition and making sure that the countries where we get a lot of the raw materials from are also taken care of in terms of development. And the way to do that is to ensure that the way these countries develop are socially responsible, but also energy responsible. We're very blessed in Africa. If we do things right here, we don't have to use coal. I mean, if the Grand Inca project in the DRC, for example, gets developed, it can provide power to most of Africa. Those are the sort of projects that we should punt internationally, that should get built, that should develop places like Africa. And that will make a big difference in this just transition and the energy transition. Everybody doing something on their own is sort of, I think, fruitless efforts, because it's a global problem, and it's something that one will need to solve globally. And you can only do it by pulling everybody along on this journey. But those are my personal views I'm expressing.
Marna, well, thank you for that, and I can agree with a lot of what you're saying. And of course, you hit a sweet spot there with the Land Cruiser, the Prado. I'm a proud owner myself, and you're
Me too.
really enjoy these vehicles. And of course, we're in a remote area, and bottom line of it is the interior will be very tough to change, and just the sheer topography of certain places, distance to a petrol station, electric station is not quite
Yeah.
viable, so you have to have these other means and methods. But yeah, our office is very, very pro hydro. We're very pro splitting
Mm.
the atom, commercial reactors, very, very much on an industrial scale, Marna. We don't
Yeah.
believe at all, and the math just doesn't work, that wind and solar on an industrial scale does not work
No.
properly. It's our personal take. We're very hardline against that. But when you look at a society, and you have a wealthy country that would prefer to dictate terms to a developing society, developing country, and they expect the developing country to make certain concessions and sacrifice. I think it's a little bit upside down thinking a little bit there. I think that people are
Mm.
going to have to realize that there's going to be other countries who are going to drive their own self-determination, and they're going to have to say, look, we're going to enjoy the things that you got to enjoy for the last 100 years or 50 years or
Mm.
multiple generations. And who are you to dictate when I shall turn on my air conditioning?
That's where we need to ensure that those conditioners are turned on hydro, etc. That's where we should be spending infrastructure money. That's where sovereign support should come from. I think that's where you make the difference. And then ultimately it becomes sort of a universal solution to the problems we are facing.
Yes, and responsible mining is so critical
Mm,
to not only energy, but also that wealth and economic development that you cannot get from tourism, bird watching, some of these specialized
yeah,
industries that just don't move the needle enough for a developing economy. So you have to have other means and methods, whether it's good tax structure, good
exactly.
policy, those
Yeah.
banking business, all that good stuff, right? So really good conversation there on that. Always appreciate you giving us some of your wisdom and opinions on these things. Switching gears, there's always a demographic of investor, Marna, out there that is looking for
Hmm.
dividends as part of their investment strategy. As the
Oh,
company grows,
yes.
as the company grows here, have to ask you this. Company grows,
Yeah.
revenues continue, operations continue, expansion continues. Is some small dividend to start on the table? And is that part of the overall vision that you and Robert have for the company moving forward to reward shareholders as the company matures out even further?
Andrew, we always joke and we say it would be a hoot to pay our first dividend. So, yes, we've had so many long only investors in our stock that enjoyed capital growth, but never really dividend return because we were developing these projects over the past couple of years. We do see the possibility for a dividend in the near term. So, if I say near term, probably next 2 to 3 years. But if we find opportunities that will add more value to our stock and would be a better use of capital, we wouldn't like to bind ourselves to sort of advocating for dividends at this point in time. So I would say we're probably not the company to invest in if that's your only investment criteria, but it is something that obviously we are looking at as we start throwing off significant cash flows at Kamoa-Kakula towards the end of 2025 onwards. It's something that where we would like to reward our shareholders for being in the stock and start paying a bit of a return back to them.
I think that's a smart way to approach it. So I appreciate your comments on that. With this, of course, increased access globally, I have to ask this again just to twist your arm here. Any plans for further listing upgrades for the company globally, Marna? Any plans maybe over the next year or so for that?
Not immediately, but we never say never because we we change our minds. If there's a compelling rationale to do so, we will look at it. But at this point in time, we're not actively pursuing additional listings.
Well, I want to also just talk briefly here, just to wrap up, community efforts, government relations. We talked on that, of course, and just any other things you want to add there. And then let me just add to it. As you know, we ask community efforts, we ask about government relations, and of course, now we ask about NGO management. Any things on those fronts, Marta, that you'd like to specifically bring up?
Listen, I think the days of not paying a lot of attention to these things, community relations, NGOs, the government, they are long gone. If I take myself personally, I probably spent a good 40% of my time on those matters. It's very important to take your host community with you on the journey. It's extremely important to take your host government with you on the journey, and we try and take our NGOs on the journey as well. We've actively, when you start with publishing your feasibility study, you do, as part of that, you do your stakeholder mapping and you start mapping all the NGOs that sort of touches points with you and that you engage with over the years. And we try and form positive relationships with the NGOs and sort of give them free access. Um, and it's always there's this one example one of my colleagues always use. When you stay in a house with a cracked wall, after a while you get used to the crack on your wall and you no longer see the crack on your wall. An NGO comes in and it sort of reminds you that there's a crack on your wall that you need to go and fix. Sometimes the crack is significant enough that you need to fix it immediately, and sometimes it's a crack on your wall that you need to live with for a little while because there are other cracks that's more important to fix than that specific crack. But I think it's always important to be open to criticism, to deal with issues as they arise, and to sort of engage. It's only through engagement and communication that we can take each other along on the journey. I think the frustration from a mining company point of view is sometimes that we feel blindsided. If a NGO or an activist would have only made the effort to contact us beforehand and engage in conversation around the issues that they raise publicly, we sometimes feel that we probably could have saved everybody a lot of harm and sort of go back and reinvent the wheel, because sometimes there are perfectly good explanations for why we do things the way we do. But if NGOs publish reports on us and it does get into the public domain, we usually try and engage with them, even if it's after the fact, to ensure that we are all on the same page and to ensure that we do address the matters that they raise that's material, but they also see things from our perspective where they raise issues that's not necessarily correct. So I think it's a two-way communication, and you must be willing to listen.
Marna, very well said, and appreciate once again how you guys approach that with your policy internally there and how you guys deal with those things, because I'll add another crack, and it's basically the small permanent crack. And those cracks can never be convinced. They don't want to get it, and they just don't get it in some cases. And I'll
Mm,
lump in NGOs, certain NGOs, and certain media outlets. They just don't want to. They're always going to make up something and claim something. And we've realized that
mm,
in this business as well. And those are just the fine cracks in
mm,
the wall that aren't structural. They're not big enough to address because we've tried it. We know what they do. Their response is always
mm.
against us, irrespective of the facts, Marna. We've seen that
Yeah.
before. And of course, that just has to be dealt with. And I really appreciate how you guys have been able to deal with corrections of these groups who don't understand. Some of them just don't understand mining. They just don't understand a lot of things, to be honest, but at least you try to help. That's all you can do. And so I really appreciate your thoughts on that and how you guys have done it. Once again, on those fronts, I think Ivanhoe Mines has a notable model. If I was a peer company, I would plagiarize the crap out of that model and utilize it
The-
where I could as well. So really appreciate you guys establishing such a great record on that front. Well, I'd like to leave it there for now. And of course, any other comments here you can add when we wrap up. But this final question back to you for potential investors and audience listening in. The company has a market capitalization of about 22.5 billion Canadian dollars. Why should Ivanhoe Mines be considered within the institutional family office and retail investor portfolio, given where the company stands today in current market conditions?
We are a deep growth story. We add organically. We we suspect we did it again at the Western Forelands. If you take, we started this company from nothing, uh, discovered a number of tier one ore bodies. There's not a lot of companies that's got those credentials under their belt. We discover them, we build them, we operate them. We build them on budget, on time, and we would like to replicate this success as we grow the company. We're definitely a copper story. We would like to remain a copper story. We think our PGM project's going to add significant value. That's sort of 2-3 years off. But if you get into the stock now, you will definitely see significant growth potential and a lot of copper exposure, because we go where others do not necessarily want to trade, and we make a big success of it.
Very well said. And even with the value delivered to date, there's much more to come. So appreciate your confidence in delivering that statement. Marna, best way for interested parties to contact Ivanhoe Mines.
To get in touch with Matt Keevil at our office in Vancouver, or Tanya Tot, who's in charge of our communications, and she is Tanya T at ivanhoemines.com. So I think Matthew is Matthew K at ivanhoemines.com. So that's the best way to get in touch with us.
Marna, always a pleasure. Thank you for the time. Pleasure to speak with you as always and get updates on progress. And we hope you'll come back again soon. Thank you.
Thank you, Andrew. It was nice chatting to you. Speak soon. Bye.